Okay, welcome everyone. Thanks again for joining us. One of these days we'll figure out the waiting room, but welcome just directly in. We will get started in roughly 30 seconds or 1 minute when we hit 11:01 Central Time. I'm Grant. This is Alex from Rejigg. He's co-founder of Rejigg. We'll introduce ourselves momentarily. Um, but welcome. Just a few housekeeping items. One, we are recording. Just to confirm, yes, we are. We are recording. And then two, we have a Q&A section, which you should be able to see within Zoom, where you can ask questions. We should have a lot of time for questions at the end. So open fire with any questions throughout. And then at the end, especially, and Alex and I will see those. And we're excited to answer them. Okay. We'll give people just a few more seconds. We start on time though, so everyone can enjoy that. Okay, welcome to 11:01. So welcome everyone. So excited to be here. We're going to kick this party off, even though people are still coming in. I'd love to start with a quick poll just to get a sense of who is here with us. We had over 250 people register for this, which is wonderful. And I am going to launch a 3-question poll, which hopefully people can see. We'd love to know if you are, how you're participating in the ecosystem as a searcher, as an investor, as a service provider, and then how long you've been searching and what deal size you're looking for, just to see where people are at. And I know that, okay, perfect. We have a lot of answers coming in. This is wonderful. Looks like, yeah, 86, 85% of people are searchers. And that was you could check multiple. So yeah, 86% are searchers, roughly 14% want to be involved in investing, 13%, 15%, and then roughly 13% as service providers for searchers. Fantastic. And then let's see, only 8% of people are not searching. And then 43% less than 3 months, 13% 3 to 6 months, 15% 6 to 12, 16% 12 to 24, and 4% are true champions 24 plus months, which is awesome. And then, okay, so for deal size, this was also a select multiple. 59% are looking for transactions between $1 million and $2 million of EBITDA, followed by 49% 2 million plus, 48% 750 to a million, and 500K to 750K. Or I guess I can just share this. I'm gonna end the poll and share it. Boom. Okay, everyone can see that. And Naveen asks a question. Thank you for proving that the Q&A feature works. Naveen, currently 92 people are here, now 93. So people are joining as we speak. Okay, thank you, everyone. That was fantastic. 94. It's wonderful to see the turnout. We're going to do 2 quick intros. I'll intro myself, and then Alex will introduce himself, and then we'll dive into the content today. So we'll make the intros nice and quick. Entrepreneurial Capital is me. It's me and our team. There's 3 others on our team. We are a fund that invests in self-funded searchers. We're mostly focused on the United States, but we're also open to Canadian transactions as well. We have $10.9 million of committed capital that our mandate is to deploy that over the next 2 to 3 years in self-funded search transactions, and our ideal check size is 250, 2 million. So that is the quick background on us. And then the quick background on me. This is my wife. This is from like a Christmas card picture a couple of years ago. So getting a lot of mileage out of that picture. My background is I started a company called Nonprofit Megaphone. I actually started a lot of businesses. 2 got acquired, 7 totally failed, and 1, Nonprofit Megaphone, has done quite well. It's a digital marketing agency that serves almost 800 clients and has a team of about 60 people, has a wonderful leadership team, has a CEO, and does not need me operationally at all, which has been wonderful. And yes, this is my entrepreneurial track record. I'm a living statistic that it is typically better to buy than to build, as demonstrated by the failure rate, but lots of fun learnings along the way. And then my wife and I, so Julia in the picture, did a self-funded search. I searched, we bought a business that she now runs called Lexigate, which is an SEO agency that serves law firms. And that was a lot of fun, and we'll chat about some lessons learned from that. And then I've made a bunch of personal investments in self-funded search type deals before now doing the fund. So that's me. It's wonderful to be here with everyone. And this is Alex and Rejigg.
Great. Thanks, Grant. Thanks everyone for being here. Yeah, so a little background on Rejigg. We're a relatively young startup. We've been around for 3 years now. We started in 2022. Um, Over that time, we've made 500,000 call to business owners. We'll share a little bit of data later on a subset of those. We've onboarded 1,200 different small business owners onto our platform who are looking to meet with buyers. We've set them up in 8,000 conversations between buyers and SMB owners. Um, and yeah, let's say it's not easy work, going out, and we'll talk about what it's like to build a platform for small businesses to be bought and sold, to find owners who are interested in selling and meeting buyers. But it's rewarding. There are 17 new retirees in the world and 17 new CEOs and business owners and counting. Hopefully 18 here later this week. So um, it's exciting. A little bit of background on me. I went to HBS in 2021. While I was there, I took the search fund class, finished managing smaller firms, where it was eye-opening. I learned a lot about search, and I thought it was awesome. But there was a part of me that felt like it didn't need to be that frustrating for buyers and for sellers whose phones are ringing off the hook from buyers. And so my co-founder Barrett had been working with his mom on selling their small family business. And so we started talking about what it would look like to make the process better for buyers and sellers, and started building what has now become Rejigg. So that's a little bit of background on us. I'll go into this next section. So just to really like double click into Rejigg, our kind of pithy mantra is, we do the calling, you do the closing, which is to say that search doesn't need to be as painful as it is, and we can help you help buyers, searchers like the 80 some odd percent of you, meet directly with owners who are looking to have conversations with people like you. So we reach out to tens of thousands of business owners every week. We have a great team of people who are working the phones and talking to business owners every day, and talking about their exit plans, and asking them essentially, if you go to the next bullet here, asking them essentially if they want to meet with people who are looking to acquire a small business. And we do that for free to owners. So, that's how we think we get the best supply, and we create as many good conversations as possible. Is we're just asking owners all the time, do you want to meet with buyers who would be interested in acquiring your company? So if yes, we put them on our platform, and then buyers can filter and search and sort and reach out directly to owners. So yeah, and our goal is shorten the time it takes to search for a company. And those of you, especially those of you who've been searching for 2 years or 12 months, know that hopefully can align with that goal. And the goal behind this is to increase the success rate. I think there are too many people who would be great company CEOs who aren't able to, because their searches run out of time and money. And likewise, there are many, kind of a subject of a separate webinar, but there are many owners who shut down their business because they don't find the right buyer. And our goal is to prevent as many of both of those cases as possible. So my hope is that some of you hear that and are interested in checking out our platform. But I also know that many of you are doing your own proprietary searches. And so we like to share the data that we see kind of as a helpful, benchmark or something that might help you see what it might take to get to LOIs and conversations and so forth. And so we're very public about our data and like to share it with groups of searchers. So, the first thing I'll just say is that calling is way more successful in our experience than emailing. So what this chart is the percentage of time that an email or a call results in what we call a good conversation, or an owner who is interested in having a conversation with buyers and selling their company. So the call success rate is about 1 in every 150 times we pick up the phone. An owner is ready to meet with buyers. The email success rate is about 1 in 1,000. So that's not to say emailing is bad. I do think that we can have a whole conversation about how emailing is changing as ISPs are getting more aggressive with spam detection. But that's just to say that, and we'll kind of talk about it in a second, but it will affect the success and the narrowness that your search can be if you choose to not pick up the phone and call owners. So this funnel on the right here is all of our calls from the first 6 months of 2024. We did 382,000 almost 383,000 outbound calls. Um, of those, so I'll just kind of walk through the funnel here so we can understand where we are. So of those many hundreds of thousands of calls, almost very consistently, we get 10% of the time somebody picks up the phone. So hopefully that's a good kind of first benchmark for you all. Of those, about 5% of them are interested in selling their business. So the other 95% of them, they're not looking to exit in the near term. They have a child in the business who's going to take it over. They are maybe already are selling their business and using a broker and deep in the process or under LOI. But 95% of the time, right, you talk to a business owner on the street and they're not selling their business. So of those, over half the time, we're able to list them on Rejigg. And I'll kind of drop these metrics that are less relevant for you. And then of those, we've 52 of them have received LOIs on our platform. So, that what I would synthesize this funnel down to, and obviously, like I said, you might take away connected call rate, or you might take away some other piece of this, but really, I think the key metric is, if the left side is you get one good conversation with a business owner who's looking to sell every 150 times you call, and of those good conversations, one in every 30 in our experience results in an LOI. Now, there's many kind of caveats and things here, but I hope that those are kind of useful headline metrics. If you go to the next slide, my favorite thing to do is kind of back of the envelope math. It's imperfect in many ways, and there's all kinds of holes that people can poke in this, but I think it's helpful to just sort of it helps me at least understand a little bit about the world and how I would think about building a proprietary search if I was going about doing a search today. So as a reminder, it takes 150 calls to get one good conversation, and it takes 30 good conversations to submit an LOI. What we hear pretty consistently is that searchers take on average 3 to 4 LOIs to get to close. So, just again, there's a lot of holes in this, but just bear with me on the back of the envelope math. If you're going to do a proprietary search, and that's going to be the only way that you search, you will need to make about 15,000 calls, I would suggest, to have a reasonable chance of getting to a close. So, the first thing is that's good news. This is not an unachievable number, right? 15,000 calls is, if you click on the next bullet here, I think that's, I just want to make sure I don't do it in my head. It's, so if if your search is 2 years, 100 weeks, that's 150 calls a week, which is a lot, but it's not so much that anybody on this call couldn't do it. So that's the good news. But let's talk about maybe how that translates to buy boxes. So, they're about the stats say there are about 5 million SMBs distributed roughly, evenly around the country by GDP and population. Again, we can kind of talk about all the caveats and so forth, but that's like the high level numbers. So I grew up in a western suburb of Illinois, of Chicago, and maybe I wanted to move back there and buy a business in Naperville. So the question is, could I run a search just focused on Naperville, Illinois? If you just multiply the population of Naperville, divide by the population of the country, and multiply by that 5 million, you'd suggest that there are 2,000 small businesses there. And I think in some ways that's probably an overestimate. So what I would say is that is not enough. I would not recommend running a search that narrow, at least not in this way, without some other major advantage that you had behind you. Okay, so let's then look at maybe doing an industry agnostic, geography focused search in a larger thing. So let's say you lived in Chicago, you're passionate about landscaping, and so you wanted to do something in the Chicago MSA. And for reference, the Chicago MSA is pretty large. It stretches up into Wisconsin, out into Indiana. So some of these businesses may even involve relocation, but that is 20,000 businesses. So that is just over the 15,000. So what I would say about this is you better have a really good way to get phone numbers, because you're going to need to get like close to 100% of the phone numbers of the people in your buy box. So I would say this is like a very marginal, I would say this would be a very risky search to run. And I personally would not stake 2 years of my career on making sure I could acquire business in that set. So let's say you are now industry agnostic, but you wanted to stay in the city of Chicago. You weren't willing to look into the corners of the MSA and Indiana and the suburbs and so forth. That gets you to 40,000, which I think now we're starting to get closer, but still I would suggest you better be very good. You better have some very good data sources or river guides, or some ways to get into a lot of conversations with business owners in such a dense area. And this is ignoring kind of the impacts of competition, which we can again, kind of a whole separate conversation. Okay, so let's say you were looking at the whole MSA and we're industry agnostic. Now we're talking about numbers that I think you could work with for proprietary search. Again, I'd like to emphasize the Chicago MSA is quite large, but this is 120,000 businesses, and I think that using the data sources out there, you will need to kind of think about paying for a source like Grata or ZoomInfo, but you could get 15,000 phone numbers out of the Chicago MSA if you were choosing to be industry agnostic. Or let's say you were passionate about landscaping but willing to move anywhere. This is 650,000 businesses and nationwide. So sorry to walk through all that envelope math. I hope that was helpful to someone. But I think that the point, I've heard it said at search conferences and so forth that searchers can either be either be focused on one industry or focused on one geography, but it's very hard to do both. And I think that this is the math that kind of underlies that. And what I'd say, if you take away kind of two things, one is that, which is you can kind of either choose to be geography focused or industry focused. And the second thing I hope you take away is that you can do it. You just have to be disciplined about doing the outbound calls and doing 150 outbound calls a week. So thanks for bearing with me on the math. I hope that was somewhat helpful to someone in thinking about how to size your search.
Fantastic. Fantastic. I'm going to quickly, we'll take a little bit of a pivot and we'll talk about my search story and some lessons learned from that. And then we're going to dive into basically tips for bonding with owners and making a great first impression, but just some quick, potentially interesting things. And thank you for people that submitted questions. We already have some great questions, which we are very excited to answer at the end. So thank you, and feel free to keep those coming. My search story is at the beginning of our search process, we started with broker deals to just get experience. I had never seen a SIM before at the very beginning. I'd never interacted, never done a negotiation with a business owner. So that's how we started. We ended up also using tools like Rejigg, which was fantastic. And like, it's a long story. Almost bought a business that would have been a bolt-on after the business that we actually bought because I didn't know about Rejigg in the early days. So anyway, and Alex and I have gotten to know each other, and if I could go back, I would tell myself about it, but alas. So started with broker deals to get experience. We were exactly in the sort of normal stats of 3 to 4 LOIs being submitted. And I just think this is interesting. The first, there's a lesson learned from each of them. The first one basically taught us to put a time limit on the LOIs we submitted. We were very excited about a deal, had wonderful conversations with the sellers, met them in person, and talked about it, submitted an LOI, no time limit. They were basically about to accept that, but then shopped it to other people, and someone else made a higher offer and they accepted that person's. So from then on, we made LOI offers where we would talk about it on the phone with the seller. We'd say, is this what you're looking for? Is this what you want? They would say yes. And we'd say, perfect. We are going to submit you now an LOI in writing. It expires today because we're all already totally on board with this. And if you don't want to work with us, totally fine. We just need to decide or not. So we like to share that in case it's helpful for anyone. Not always possible. Sometimes there are situations where that doesn't work. But I'd say especially in the typical issue with that is there's a broker who's saying well, no, we want to get all offers. And then we'll get back to you next Tuesday. In a more proprietary or off-market scenario, like you'd be probably interacting with if you're using a platform like Rejigg or doing your own outreach, it's probably more possible to do something like that. And it was wildly helpful. So wanted to share that. Second deal blew up because the sellers were accidentally counting debt that they were taking on as revenue in QuickBooks. And so that did not work. They thought they were making money and they were actually losing money. So just a shout out to doing equality of earnings. We caught that ourselves, even before, anyway, but very exciting. Third one was interesting. We went under LOI and the business had something really good happen to it during the diligence period and just became an absolute gold mine. And the sellers were the nicest people. They're like, I'm so sorry, we can't sell this to you. It's a gold mine. Long story, we actually stayed in touch with them. That ended up changing. And then a year later, we actually did end up acquiring that as a bolt-on to my wife's business, which is hilarious. So Sometimes it's the long relationships that are the best, even if it seems like it's going absolutely nowhere. And then the fourth one we did close on, which was great. This took 9 months in total, which is much faster than the average, and I think just because we got lucky, to be totally honest. So that was exciting. I'll also just quickly say we were kind of a weird buyer where we didn't want to use SBA debt. And so we went specifically to businesses that were non-SBA eligible, either because they'd been incorporated internationally or had some kind of weird, interesting nuance. And that made it much harder in many circumstances, but also it made us very competitive in non-SBA deals. And so I would just say, like, and we'll talk about this in the section that follows, but figuring out what your strengths and weaknesses are and playing to them can often be very helpful, because you don't have to be the best buyer for everyone. You just need to be the best buyer for one person. Okay. And then just quick perspective, because now as an investor, yeah, I've seen so much now from investing that I had not seen back in the searching days. And I also wish I could go back and tell myself a lot of things. But the thing that we've noticed most of all is that the best deals, whether you're a searcher, investor, or whatever, happen when the buyer and the seller have formed like a legitimate relationship, and the seller is choosing the buyer for non-monetary reasons. The deal we bought, the seller turned down 25% higher offers because he thought the other guy was a jerk and he thought we'd take good care of the team. And for the deals we invest in, that's like a through line through the vast majority of them, where there's some kind of weird, interesting circumstance. The seller really didn't want to sell to like private equity. We were just talking to a searcher that's under LOI for business that actually was previously sold to private equity, and like the sellers retained some equity and the PE firm just totally messed it up, and they ended up buying it back. And anyway, now years later, they're ready to sell, like, and retire for real. But there's always like a weird story like that. And people talk a lot about, there are disadvantages to being a searcher, but there are also advantages. And the biggest one is just building actual relationships with sellers such that they choose you for non-financial reasons. And you have to be reasonable, but you want the relationship to carry some of the load as well. Quick tips with respect to that is meeting the seller in person ASAP. We think is so valuable. It demonstrates so much seriousness, helps you get a sense, very helpful for diligence, but just makes you serious. We do this even pre-LOI, and it helped a lot. Meeting people's families, very helpful. This is like a group thing. There's always other stakeholders, both on your side and on their side. And if it's family really likes you as a potential buyer, that tends to help. And we saw that in our transactions as well. We've had a lot of fun in our conversations with sellers asking what their ideal outcomes look like, and we'd ask them to sort of like rank or prioritize, like, is total purchase price most important, cash at close, my comfort with the continuity of the team and the brand, and just like all, like, my legacy, like all kinds of different things. We basically ask sellers to be like, which of these are, we know they're all important, but which are particularly important that you want to make sure that we understand is important to you. And that's been helpful because we want to craft an offer that is not just a financial offer, but is a holistic offer that they really appreciate. This is just always fun, like just like sending little unique, thoughtful, funny gifts, like getting people's mailing addresses, sending them that helps. And then like handwritten notes, also good. Handwritten notes just cannot be beat. And just showing a lot of interest in the seller's specific business and industry, and that you're not just interested in anything that has legs and walks, but specifically their business and for specific reasons that you can articulate. And that is a beautiful segue into our next section of how to position yourself as a searcher. And Alex is going to show some examples.
That was a great segue. So we just like to share these examples of actual messages that have happened on the Rejigg platform from a buyer, an initial message from a buyer to a seller, as kind of the best practices. And the results speak for themselves, because this is a message that led to a transaction happening on our platform. So I've obviously redacted some of the identifying details, but this was somebody who reached out they were actually in their second year of business school. They had all the disadvantages credibility wise that a searcher carries. There's some natural skepticism of things like that. But to your point about leaning into strengths, I think this is a really great message. I'm not going to read it, but I will summarize a few like key points here. The first is they mentioned it's a partnered search, that they had military experience, that they had families, um, that they went to this top 5 business school, and I think that this everybody has a different kind of opening paragraph there, right? You don't need any or all of those things, but I think leaning into something about yourself that is credible and unique and so forth is really valuable. And the second paragraph in this is a few things to call out. They mention, Grant, exactly to your last point here, they're doing a thesis-driven search with looking to acquire an MSP business. So this is exactly what this business was. The point is they're specifically interested in the business. They have access to capital and ability to close, which is a big kind of credibility point that a lot of business owners are understandably nervous about when talking to someone in their late 20s looking to buy a business. And that they're looking forward to the connection. So I think this message it's concise, but it hits on the key points, which is something unique about the searcher, something unique about their specific interest in a business. And I think this is a really good message.
And I'll just
On
call
the,
out, this is a great line. I'm happy to provide proof of
yeah,
funds if necessary, because this sounds great. We have access to capital, $5 to $20 million, which is, a seller might be like, okay, like I'd like to see you prove that. But if you say I'm happy to provide proof of funds, one, they may like it. Obviously, you have to actually have it, but that is it brings a dramatically increased sense of credibility, and we'll talk about that in a second. But
yeah,
just wanted to call out that one line. Carries a lot
yeah,
of load.
great. Good to call out. Yeah. And so here's an example of a message that was not as successful on our platform. I will read this one because it's very short. The person said, "Hi, I'm focused on nonprofit tech and would love to learn more." And you know, the best thing about this message is that at least it contains something specific about the business, but it does not show the owner that the buyer put in the time and effort and the interest in the business. It does not say anything about the searcher. So essentially, you're putting the owner in a place where you're asking you're preparing yourself to ask some very personal questions about their business, how much it makes, the thing that they've spent 30 years building, and you've shared nothing about yourself. So it's already, I think, an asymmetric relationship you're setting up here. So the owner here reluctantly took a first call, closed the conversation, and told us afterwards that they didn't want to talk to searchers like this who lacked the quote maturity and awareness to buy a small business. And so I think that this is an example of maybe what not to do on the when once you do get an owner on the phone and are talking to them.
Yeah. And it's a deeply emotional process. Someone saying they
Yeah,
lack the maturity and awareness is basically saying, like, I didn't feel respected, or like I was
yeah,
talking to a credible person. Anyway, which makes sense.
yeah,
So yeah. And not what the searcher intended. I don't know who does, but I'm sure that's not what they intended, but that's what it
no,
is, the impression that was
yeah,
created.
yeah. I think it's like I give all those numbers because I do think there's some parts of search that are a numbers game, but like all things, it's like when you're closer to the ground, it shouldn't feel, or you shouldn't act like it's a numbers game. You need to um, do the work and remember that this is a human being who's probably spent their entire career building this thing. Um, and so while volume is a part of search, what makes this hard is not letting that seep into the way that we communicate with small business owners.
Yeah. And we're already very far down the funnel here. The person wants to sell. That's why they're listed on the platform. And so it's like, you know,
Yeah,
this is hundreds of hours of effort to probably come to this point, and it's like,
yeah,
yeah, now got to lay it all out on the message. Yeah, that's a great example. So going back to the whole proof of funds concept and other sources of credibility, this is something that we do. We chat with searchers all the time, and if searchers have great backgrounds and we feel really confident in them, we're happy to give them support letters and provide proof of funds, which is helpful potentially as you craft these messages, because you want to have every ounce of credibility that you possibly can. So that's what I just said. We can do this, and I'll share more info on how we can chat about that if it'd be helpful to you at the end. The things that you're looking for in a support letter, whether from us or from someone else, is you want there to be some description of why this searcher is good and what are some interesting things about their background, about their experience, about their commitment, etc. You want it to come from someone who has credibility. Obviously, you know, if it's from someone with no credibility, that will be tricky. And particularly if you are a seller, you can imagine that the number one thing that you would look at if you pulled up a support letter is there a dollar amount in there that says this potential equity investor would has the capacity to write checks of up to X. And you just want to put that there. This is what ours look like. They look all nice and basically have a couple paragraphs about the searcher, and then has in this bold, we make it bold, equity commitment capacity that we have. And obviously it's all of these are non-binding. So it's pending diligence, pending making sure it's actually a good transaction. But these types of things are great to start collecting if you're having conversations with potential investment partners earlier than you'd think, so that you have them when the great opportunity comes around, you could be as credible as possible. Okay, and then we'll do quick how to get involved stuff, and then we have a ton of questions. We have 16 questions already, so keep them coming, and we will answer all of them and more. So I'll go quickly, and then Alex will go. We are happy to chat with searchers both pre-LOI and during LOI. And I will just share what our ideal investment criteria are. We have 4 qualitative things: low customer concentration, low CapEx, so like low capital expenditures, low cyclicality, meaning it's something that's non-discretionary. And if there was a big recession, that we wouldn't be really nervous about the business falling off a cliff. Low customer concentration means you don't have any massive customers that are like a very large percent of revenue. And then history of profitability. We're classic self-funded search ETA investors where we're not interested in startup type things or turnaround type things. We just want very good businesses that no one would ever sell except that they have to retire, or except that there's some sort of personal dynamic that's forced them to consider a sale and a new owner, and then someone like you stepping in. Our target is $750,000 and up of earnings, and we don't want to pay more than a 5x multiple on anything that we're investing in. We think that that's more than businesses in this universe warrant. And then if you are searching, let us know. Peter Vaselkiv is our chief of staff and chats with pre-LOI searchers all day, every day. This is his email. Feel free to screenshot it or write it down or whatever. He would love to chat with you. And he is the one who is basically he chats with people. And if he's really impressed with them, says like, we'd be honored to do a support letter and so forth for you. We don't give them to everyone, and I apologize for that because we want them to mean something, but I'm sure there are a bunch of very impressive searchers on this call now, 160 people. So Peter would love to chat with you. And then if you are under LOI, feel free to send like a teaser or an NDA or any materials you have to clark.allen@entrepreneurialcapital.com. You can CC me. I'm just grant@entrepreneurialcapital.com. We'd love to take a look and see if we can be helpful. And then we have a variety of resources, which I will just share here. We will share these slides as well. We put together a deal team guide where we interviewed like 70 SBA brokers, lawyers, QOV providers. We got all of their pricing information. We got comments on them from searchers who've worked with them in the past. And it is all available at this PDF here, tine.cc/deal team. It'll redirect you to the PDF that we have for that. So feel free to download it. No email or anything required. You can just download it. And then if you're curious we follow the standard self-funded search investor terms. And if you are curious how those work, there's a video here that explains it, tiny.cc/terms explained. And this is the term sheet itself. If you're curious and you just want to take a look, check it out. We're in the process of redoing our website, and all of this stuff will be on the website. But until then, feel free to screenshot this or whatever you want. Then finally, we have a newsletter. This Week in ETA goes out once a week, big surprise, where I share personally the things that I think are so interesting. I would text a friend about them. It's very short, and almost 1,000 people now signed up for This Week in ETA. So we'd love to have you join. And then Rejigg, Alex can share.
Thanks, Grant. Yeah. Is that explainer video one of the ones where you're drawing on the paper?
Yes,
those are awesome videos. I can't recommend them enough to everyone. Yeah, and I'll just also just put up. having a support letter from a reputable firm like Entrepreneurial Capital is just so differentiating. And I think it's just, it's a great, it's the least you can do. I think in terms of like trying to line yourself up, I think having a website and having a support letter are the two most important things that we see on our platform in terms of buyers who are able to quickly build credibility and, owners are eager to talk with. So just can't, uh, you know, encourage you enough to reach out to Grant and his team. Um, a little bit about Rejig. So we like to say we built Rejig to be a no-brainer for any searcher who's trying to do proprietary search. Um, and so what that means is it's free to get started. We charge a success fee at close. And so based on a lot of feedback from the market, what we heard is that searchers are cash strapped while doing the search and willing to pay success fees at close. And so we've really oriented a lot of our model around that. You can also sign up for a subscription if you're using our platform heavily. So what that gives you is a little bit of a few-day head start on a few of the leads on leads as they hit our platform. Subscription and lets you request more than 20 conversations. So your first 20 conversations on our platform you can do for free, just the success fee. But if you do more than that, you'll need to get a subscription. And we have a promo code here, deals 100 for the attendees of this webinar. Reach out to me or my colleague Bobby with any questions. I'm Alex at Rejigg and Bobby's Bobby at rejigg.com.
Boom. Okay, thanks. So let us get into questions. We have a ton of questions, which is fantastic. Okay, Harneet asks, I think this is for Alex. How do you differentiate yourself from brokerages like Transworld or listing aggregators such as BizBuySell, BizQuest, etc.?
Yeah, it's a great question. I think it gets to really the difference between brokered search and proprietary search, right? So the way that we understand the world is that if you're a searcher, you probably want to have kind of two channels going. One is you're cultivating relationships with brokers and looking at brokered leads that have teasers and sims and probably an asking price and a date that bids are due and a process for doing management meetings and so forth. And so this is kind of one channel of search. Rejigg sees itself very much in the other channel of search, which is reaching out directly to small business owners, talking to an owner who, is probably in the mindset of, hey, I know I need to sell my business in the next few years, but I don't really know where to start. I don't exactly know what my business is worth. And if you can find an owner and have the patience to build a relationship with them and explain to them what a fair deal would look like for their business and what a transition plan would look like. Obviously, there are pros and cons to both of those channels. And I'm not here to tell you to not talk to any brokers, but we very much, what I would say is all of the things listed in that question are ways to find brokered leads, whereas we very much see ourselves as a way to find unbrokered leads.
Perfect. Okay, next one is maybe for me. How much do you recommend aspiring buyers having cash flow before searching? Or do you recommend searching and saving a certain amount before you're ready? Most of the time we see, like most self-funded search transactions that we see or that we invest in, the searcher is searching at like night or on the weekends while they have a normal job. Sometimes people will quit their job and go full time. Most of the time, though, they're doing it part time, which is really impressive and gives you a lot of runway and makes it such that you don't have to feel like you have time pressure that might force you to accept a less favorable transaction. In terms of equity, there are definitely like, if you find a great deal, the equity will probably take care of itself. Like folks like us, thrilled to talk about it with you. We like to see searchers having at least on the order of like $50 to $100,000 to personally invest in the transaction as well, just to demonstrate skin in the game and sort of to demonstrate that they've been thoughtful financial stewards of their own resources and have been able to save money effectively prior to the search. We know that sometimes there are like interesting scenarios that would prevent that, which we are open to. But that's sort of general perspective, if that is helpful. Okay, Carlos says, does putting a time limit put unnecessary pressure on the seller? And you say that that's wildly unreasonable. How did you respond? So the way we did it, I think, is important. We had a lot of discussions about the LOI, and then we only did the time limit once they said, this looks good. And then it's like, okay, now that it officially looks good, we're all agreed. So all that's left is to sign. and we've all looked through the document already, and it's at that point that we put a time limit on it. We wouldn't send it to them before that agreement because there's no point in sending them a document, in our view, that they don't agree with. That just seems silly, and we want to avoid them going around to other people saying, "I have an LOI in hand," because like, no, you do not. We have not submitted an LOI. So yeah, some of this is stylistic as well. Okay, can you offer multiple LOIs at the same time? Potentially, and we would just say that uh, I, in my view, it's probably not a good idea to be under LOI with multiple businesses at the same time negotiating. I think you could be making multiple offers and knowing that not all of them will be accepted. Absolutely. I just think that it's if you're doing diligence is very intense, and so if you're trying to do diligence on two businesses at the same time, that is tricky. I think there's a little bit of a reputational risk too of like misrepresenting yourself to sellers potentially as well. Grant, why were you resistant to SBA debt? It's a long story. Basically, just because we thought we could pull off a transaction without SBA debt, and we didn't want to sign a personal guarantee. Um, it was unclear whether or not that would work. In the grand scheme of things, it is much easier to buy a business using an SBA loan. We made it unnecessarily hard on ourselves, and fortunately it worked out. But definitely not the easy path, and not necessarily the recommended path. Okay, and then this is probably for Alex. What is your conversion rate from LOI sent to LOI accepted typically, do you see?
Yeah, we see it pretty consistently just under sort of between 40 and 50%, is where we see it on our platform. I'm curious what you saw in your search of the four
Well, we
times
have
you were under
fake
LOI.
metrics because we wouldn't send them
You
unless we
don't
knew
send the
they were
number
going to
until later.
accept
Yeah,
it.
makes sense.
But
Makes sense.
yeah,
So you were
but
4 for 4 on that.
well, 3 for 4 because the one got chopped.
Oh, right.
Yeah,
Got it. Yeah.
yeah,
Okay.
yeah.
Nice.
That's
Nice.
great though. 40-50% across the platform. That's fantastic.
Yeah.
Yeah,
So we
interesting.
see about 40 to 50% of submitted LOI signed, and then 40 to 50% of those that are signed close. So we're like, about
Yeah,
25% or 20% of all
yeah.
LOIs close.
That's quite good. That's fantastic. Interesting. Okay, I answered the SBA debt question. For Rejig, where did you
Yeah,
get the number of SMBs in a city?
sure. So for some of those city like back of the envelope numbers, I just took the population of the United States time, that 5 million and assumed it was allocated evenly, which again, we can talk about all kinds of caveats. I think there are some industries like landscaping that probably is roughly distributed by population, and then some like accounting firms that are more, distributed by GDP and other small businesses and things. So, there's some imperfect. And then, to be honest, some of those numbers around landscaping and so forth, I had just asked ChatGPT, and ChatGPT came up with I think, reasonably cited, well, good answer about how many landscaping businesses there were in Chicago. So, um,
Close enough.
both
Not an
close.
exact
Yeah,
science
exactly.
anyway. Yeah, no one actually
Exactly.
knows. I wonder if
Yeah.
there's census data. The census, I've tried looking at the census data and it's really confusing the way they present it, but that could be an interesting resource as well. Um,
Yeah.
yeah, yeah. There's interesting other data sources too. Just so everyone knows, the PPP, the Paycheck Protection Program loans back in the day, all of those are public record. And so you can see every business that got a PPP loan, which is almost every business in America. Um, and you can see the size of the loan. They may have changed it, and now you can't see as much. But at one point, you could just download a spreadsheet of literally every PPP loan in the country, which was wild. Okay, someone's willing to share the list of important topics to the seller. Love the idea of asking them to prioritize that as a jumping off point. Yeah, I can share some of these as a follow up or like a social media post or something. But I've done it with little sticky notes where I've written like 15 things, and I off the top of my head, things included like purchase price, cash up front, retaining some kind of upside in the transaction, which is tricky because you can't really roll equity anymore, but retaining some kind of upside, having income over time, because I'm trying to sort of loosely point to people that there are some benefits of having a seller note. You're spreading out your tax liability, you're giving yourself some ongoing income. Um, Continuity of the team, continuity of the brand, legacy for themselves. Like it's like we'd be happy to, always share on the website that like you were the founder and you started this, things like that. Timeline to close, certainty of close. um, ongoing involvement or transition period. Those have been some of the main ones. And then yeah, just anything else. We're always thrilled to hear if sellers have another item that's really important to them. We should include real estate valuation and disposition if they want to sell this as well. Agreed. Yeah, totally agreed. That I guess is more of a comment than a question, but absolutely agreed. Okay. And then for Rejigg, what are Rejigg's fees? Are the fees eligible to be part of the SBA loan? I'm guessing this sort of success fee.
Yeah, great question. Very sophisticated question, and one that I didn't have a great answer to until 6 months ago. So Rejig fees are transitioned to a. We recently made a change, and they're now a single Lehman. So, for those of you familiar with the Lehman scale, happy to talk about the history of it. But essentially, it's 5% of the first million, 4% of the second million, 3% of the third million, 2% of the next million, down to 1%, and then 1% of everything above 4 million. So, what that works out to on like larger deals, like if you start to get towards like 20 million, it really starts to approach like 1%. Around 10 million, it's like around, don't quote me, I'm bad at doing math on the spot, but around like 2 or 3%. So, our success fees are kind of in that range. And they are eligible to be part of an SBA loan. There are some things that we did to make sure that that's the case, and we'll work with you and your lender to make sure. But we do have successful examples where we have been able to make that part of an SBA loan. And great question, but yeah, we're able to make it part of the loan.
Yeah. And that's pretty much the standard, the Lehman scale. If you're working with like a quote buy side broker or like buy side advisor, it's basically always that, which makes sense. Does Rejig include listings in Canada?
Not yet. Occasionally, a business will trickle in that has some kind of cross-border type operation, but at this point, we're pretty US focused.
Yeah, fair. What are the terms you're looking for in investment and what do they mean? I would just, I'm not sharing my screen anymore, but I will share it again and I will point you to our term sheet resource and especially the video. This video is actually quite good, in my humble opinion, at explaining them because the terms there's like preferred return and step up and distribution waterfall are the main terms. And I believe the video does a nice job of explaining. I also have a video that dives into just step up in particular, which is on LinkedIn. And I can, if you shoot me an email or send me a LinkedIn message or a Twitter message, I can send that to you as well. Okay. How does Rejig prep owners for the process of selling their business? For example, how much insight do they provide owners on what will be needed, e.g. time, information, deal team, et cetera, to actually sell?
Yeah, great question. What I'd say is that I like to think of our business as a platform. So what that means is that the high level answer is that we let buyer and seller kind of work together and negotiate their deals as if the buyer had cold called the owner or stumbled into them at a conference or something like that. Having said that, obviously, we've talked about our fees. We're highly incentivized to make deals happen on the platform, and we are always looking for ways to make that more likely. So about a year ago, we rolled out a free valuation report. So any owner on our platform can opt into a free valuation. And about half the owners on our platform have taken us up on that, where they share their QuickBooks usually and tax returns, and we're able to give them some comparable, examples of transactions that have happened in their space and so forth. Deal team, similar, we have found that one of the most important things on the seller side in terms of what we can do to help deals happen is having a credible and good M&A attorney, not using the attorney that they've probably used for other things in the past. And so we are very we try to be as kind of helpful as possible in terms of introducing people to credible M&A attorneys who've done small business transactions. So we step in there, but what we don't do is we don't try to help owners negotiate against buyers. We don't tell them that this offer's bad or this offer's good or they should talk up this part of the business or stuff that a broker would do. We're really trying to offer our platform as an opportunity for more organic kind of proprietary style conversation between buyer and seller, that we believe helps people build relationships and get to a deal. You know, we like to say, fewer intermediaries means fewer miscommunications. So we think just having conversations between buyer and sellers is the way to go. So we hopefully that answers the question.
Yeah,
It's kind of a
that's
complicated one.
fantastic. We're going to accelerate the pace of answering because currently questions are coming in faster than we're answering them. So we're
Okay.
just going to let it fly here. Someone says support letter. Is this pre-LOI? And the answer is yes. It is a pre-LOI support letter to help you hopefully get under LOI through your increased credibility. Okay. And then a comment on the question from before about like leasing and property and so forth, talking about basically there's a benefit to using a sale leaseback as a strategy for sometimes using the real estate as part of the financing approach, which is very clever and doesn't always work, but when it does work, it can be fantastic. So thanks for that comment. Um, Question for me, do you allocate within the UK market? Not yet, unfortunately, just US and Canada. It's something we're pondering because we're actually getting a lot of interest from the UK, but not yet, unfortunately. Um, can you explain that story about how you asked CEOs for their favorite books and got responses from a lot of them? I think I saw it on LinkedIn, but wasn't sure the context. Okay, very quickly. In our senior year in college, 10 years ago, my wife and I wrote letters to all of the Fortune 500 CEOs asking for book recommendations in like a one sentence typed letter that we hand signed, hand PS'd, and sent in the mail. And 150 of the CEOs responded and shared their book recommendations. And it was so fun. So the power of snail mail is really wonderful. Um, and I'd be interested, actually, put in the Q&A if you have tried snail mail at all for your proprietary outreach for trying to buy a business, because I'd be fascinated. I don't know if you guys have tried that at all, Alex.
We ran kind of a postcard experiment. We didn't do it, and to be honest, it wasn't very successful. But I think that
Yeah.
there are probably some ways we could have leaned into it a little bit more, and we might try again this year.
Yeah. Okay. Brian says, in your experience, how much of a red flag is it that the broker and the seller have not clean ad backs, e.g., are only able to verify 75% of the ad backs? The remaining explained by the broker as family with credit cards. Is this par for the course or reason to run? I would just say it's a reason to not count that 25% of ad backs. It's either if you can verify, like if you can substantiate it, that's totally legit. If it's like a mysterious family member with credit card, but we can't show you the actual transactions and what they're buying, then I'd be like, what would I would ask them like, what would you do in my shoes? How would yeah, how would I understand that? How would I become comfortable with that? Um, are all the leads on Rejigg solely on the platform? E.g., they can't be found on popular aggregator websites like BizBuySell.
In general, the answer to this is yes. So like I said, we source by calling business owners directly. What that means is that in general, they're not marketing themselves. They're not using a broker. Almost every business on BizBuySell is put there by a broker. So that does not apply. Very occasionally, in the course of our calling, we'll stumble into an owner who says, "Oh yeah, I am for sale and I'm listed on BizBuySell," and then we make a judgment call about whether or not we think it would be value add to the buyers to also include them on our platform. But it is the case at 95+% of the time that the listing will only be found on Rejigg, and the owner is only using Rejigg for their sale.
Love it. For an LOI deadline, what's the range of time you might recommend? Our personal approach, which is weird, is we would talk about the LOI with the seller on a call. We'd go over it line by line and say, does this look good? Make tweaks until it looks good. And then we'd send it with a deadline of that day because we're already fully aligned and there's nothing else to decide on. But that's unique to us and may or may not be the right choice for everyone. But for us, it was very effective. Alex, what size businesses do you qualify the sellers, financials, team, et cetera, in any way before putting them on the platform?
Yeah, great question. Our sweet spot is $300,000 of EBITDA up to 3 million of EBITDA. So that's really the sweet spot. A few things smaller, a few things bigger, but that's really the size. Qualification. So we don't, certainly don't do audits or things like that. You'll see about half the business on our platform have a little green check mark next to the financials, which means that the owner shared with us a tax return or QuickBooks file that has that number on it. And we encourage every owner to do that. We boost those up in the listings, in the rankings a little bit. But like I said, we're really trying to stay at the platform level conversation between buyer and seller. And we don't do, kind of any formal verification of financials.
Cool. Do you have any recommendations for apps used for deal rooms? Most people just use Google Drive, to be honest. DocSend is awesome. You have to pay money for it, and most people don't. If possible, we would just, since we're on the other side of the table from this, if there's a possible way to have an electronically executable NDA as opposed to sending people Word docs that they have to fill in and painstakingly sign, we highly recommend that. But then Google Drive is honestly fine, um, or Box or Dropbox or whatever you want to do.
And if you're using Rejigg, Rejigg has a built-in data room and NDA DocuSign. So yeah.
Shoot, look at that. Okay, what multiples and deal sizes are you seeing today on Rejig?
Yeah. So obviously the answer is very much it depends, right? And we only have 17 closed data points, but I think like small businesses tend to transact for 3 to 5 times earnings is what we see. Obviously, it depends on the structure and the amount of that that's earned out and so forth. Certainly see some higher things, typically like software, high growth deals that happen on our platform. Certainly see some lower kind of distressed situations where you know um, usually honestly related to health things with the management team that lead to lower multiples. But yeah, hopefully that's um, an answer. It depends, but 3 to 5 times.
Totally. Perfect. When in due diligence on an S&B deal and you find a nice to have in your strike zone that's missing, so everything looks good, but there's something that's kind of nice, but it's missing, something that impacts your valuation but isn't mission critical, do you recommend the owner fix it pre-close or keep as is and address post-close so we can buy at a lower entry multiple? In practice, our experience has been that if an owner wants to sell, they kind of want to sell right around now. And they probably don't want to go through like a long process to fix something major. If it's minor or if it's something that would be better to be fixed by the current owner than by you, totally worth pushing for, especially if it's not that time consuming. But in practice, we haven't seen a lot of times where something like dramatically has changed between starting a sale conversation and then actually buying the business. But every situation is different. And, you know, yeah, a lot of nuance there. I wanted to clarify, does Entrepreneurial Capital help with bridging the funding gap after the use of SBA funding? Yes, that's what we do. We are basically into the equity gap. We write equity investment checks. And what percent of a deal would Entrepreneurial Capital invest in? We like to see, I mean, the SBA forces you to have at least 10% equity. We like to see 15% or maybe slightly more just to have like a little less risk in terms of the total enterprise value. And then we are happy to be kind of any slug of that would equate to roughly $250,000 to $1 million. And the math just works out from there. So that's sort of our typical approach. Grant, I saw on YouTube, a YouTube video, a brief summary of your terms for funding a purchase involving a percent of capital and step up. Could you explain that more and how those would affect the control of the buyer, who puts only a 50 to 100K in capital? I'm happy to chat more if you have questions about the terms. The video, sounds like you've watched the video. The video is hopefully a good explanation, but maybe could be improved, and happy to chat if there's specific questions. The way that these transactions work is that the searcher is in operational control. The SBA actually does not allow outside investors who aren't taking a personal guarantee, which we're not, to have operational control at all. There are investment terms basically that say if you want to like sell the business, buy an additional business, pay yourself a massive salary above what was originally negotiated, hire your sister, or like other things like that would sort of fundamentally change the arrangement. Those things typically require investor approval, but like any operational thing that's not affecting the capital structure or the overall framework is at the discretion of the searcher. And that's why it's such a dance, is because it's like, as a searcher, you really want to get to know potential investors. Investors really want to get to know potential searchers because there's a huge amount of trust that goes into that because the searcher is the day-to-day person in charge and calls the shots. When emailing Peter, what are some details he may enjoy having but not overwhelmed with too many pages? Yeah, feel free to send him just a quick background, what you're looking for. If you have comments on like why you're searching, he's thrilled to hear it. And then he'll be thrilled to chat with you. Okay. Alex, have you seen an increase or decrease in proprietary listings since you've started Rejigg? Curious how the landscape has changed as ETA has gained popularity.
That's a great question. I don't want to hold myself kind of expert on the super long-term trends, but what I will say is that our view of how things have evolved over, call it 10 to 30 years, is that the concept of proprietary search really was very tough to pull off when it was first kind of coined, because owners were like, you're telling me that you can just be a 28-year-old and buy a business. What's an SBA loan? And I think as the space has matured, as buyers have had more resources and found better ways to explain to owners what a search is and why it works, and the ecosystem and proof of funds and support letters and things. I think all these things have made proprietary generally easier. So hard for me to say, kind of hard for me to notice any trends in the last kind of 36 months we've been in business. But what I'll say is that I think overall, I believe that the trend is towards, especially kind of in this like sub 3 million EBITDA part of the market, there being more resources and it being easier as a searcher to do a deal without a broker.
Love it. Love it. From a proprietary standpoint, what is a good way to get phone numbers and emails for owners? I found Zoom info to not have smaller businesses.
Yeah. So what else? Rejigg has not reinvented the wheel here. We have leaned on data providers who are good at doing this. Zoom info is not perfect, and this is why I said in my kind of market sizing thing that if you need to get to 15,000 phone numbers, you probably can't target a space of 20,000 businesses in it. Our hit rate on there kind of very much depends on the size of the market and so forth, but it's certainly less than 50% in terms of all businesses could we just find the cell phone number. So, cell phone numbers are best, but sometimes you have to just call the business directly. The good news is that as you get smaller, the more likely it is that the owner is the one picking up the phone when you call the number on the website. So, it's not easy, and but it's something that a lot of smart people are using AI and trying to find more ways to get in touch with owners.
Love it. We have two people that ask the same question, which is how come you can't reissue equity to the sellers? I haven't seen this with the SBA, or what's your reasoning? And so this is new as of June 1st. Any seller who's rolling equity will also have to personally guarantee the SBA loan. So you can, just most sellers are unwilling to do that. And I've never seen the transaction happen post June or July 1st, whenever the new rules came into effect, that did have a seller roll, unfortunately. And then why can't sellers roll equity? Same answer. Do you help with the due diligence process? And yes, we go through it alongside folks. If you're asking me, Rejigg does not. Rejigg is a platform that just makes the connection. Is there a specific industry you will reach out to, or you will reach out to any and all businesses I'm looking for? This, I think, for Rejigg, and yeah.
We're largely industry agnostic, is the short answer. Yeah.
Rejigg reaches out to all kinds of people, puts them on a platform, and then you can choose to use that deal flow that they're generating. They don't do like specific searches for specific searchers.
Yeah.
Alex and Grant, can exit advisors collaborate with you at Rejigg or Entrepreneurial Capital? Yes, for us, absolutely.
Yes, and we also have partnerships with exit advisors that will send businesses that need a little bit more help, and also work with them on opportunities that they're working on. So feel free to reach out to, sounds like either of us.
Yeah. No, we're thrilled to help as well. Alex, can you please clarify for me what you said about the tiered success fee being eligible to be rolled into the SBA loan? I thought with the new rules, there's a threshold which is below the success fee. I'm unclear though.
What I'll say is it's a little bit complicated, but I don't maybe just take this one offline. I don't mean to, but it is something that we've been able to work with and achieve, and we're flexible and looking to, support people in being able to finance this. So happy to kind of talk about this at close with folks.
Love it. Is there a best way to find owners' cell phone numbers? We kind of already answered that, so I'm just going to keep rolling. Nice. Someone says yes and about to ramp up. Snail mail. Okay, cool. That's awesome. If you want to message me, I'd be fascinated to hear how it's going. That's wonderful. I found that many S&B owners overvalue their businesses through emotional attachment. Alex, how do you express the value of an owner's business, typically as a profit multiple?
Yes. Yeah. So on our platform, it kind of shows the EBITDA multiple. Definitely, hear what you're saying about overvaluing business. I think, we really try to show comps and so forth. I think part of the theory of our business is that it's kind of a marketplace, and so if an owner can have 5 conversations with different searchers, and they each have a different way of valuing the business, but they're all getting to a number that's like in the same neighborhood. You know, that's the kind of thing that I think, smart owners are able to synthesize and understand, like, this is, kind of where the market is at. And it's why we think our business works as a platform, and the more buyers there are, the stronger it gets, and the more reasonable owners' expectations of price are. But yeah, I don't know if yeah, I don't, you can think of it as overvaluing, or just, why would an owner come in and negotiate against themselves? They're going to probably start the process with the highest reasonable number you could justify, but um, you know, uh, somebody who's built a successful business doing, 1 million in EBITDA is used to negotiating and reevaluating their priors and things. And so I think that in general, you're usually across the table from a reasonable person who's used to doing deals and getting things done. And I think that hopefully works in your favor.
Love it. Love it. Okay. I mean, I know that we're past time, so I'm just going to try and clip through some of these. Someone says Outreach is now kind of a Dale Dupree model, mini trash can with a crumpled letter for the owner, probably throwing it in the trash, but maybe learning more about our company and how we can work together. I love that. I love creative direct mail. That's awesome. Um, Alex, do you have stats on how closure rate metrics for Rejig vary by seller motivation levels? That may or may not be something you track.
Um, we just started maybe about 6 months ago classifying owners, and maybe this is what this person's alluding to, into their intent to sell as like high, very high, curious, exploring. And so um, we will have more stats of that over time. What I'll say is that, yeah, I mean, it's a very strong predictor. What we find is if an owner is not going through the steps with us to upload financials and things like that, it is a very negative sign in terms of their intent to sell in the near term. But yeah, I don't have numbers offhand.
Yeah, totally makes sense. Do you happen to know if you have laundry services businesses listed on the platform?
I don't know offhand. I know that we have in the past, and so I don't. I think it's very likely that we do now. But you can create a free account and type in laundry to the search. Yeah, I'm showing two things that pop up when I type in laundry. So check them out.
Boom. Look at that.
Yeah,
That's great. And then this answers another question, which is, okay, that was answered. And then is there a list or a breakdown of types of businesses on the platform by industry? And probably the best way for people to see that is make a free account and check
yeah,
it out, um, which is great. Alex, do you have a rough sense of how many searchers and how many sellers are on the platform? I'd say like
yeah,
active searchers and then sellers.
yeah. In any given month, we have about 400 buyers who submit a request on our platform, and right now we have about 550 or almost 600 business owners live on the platform.
More business owners than buyers. That is awesome. Got to get some more buyers in there. Okay, so this is answered. For deals over the $5 million SBA limit on your platform, Rejig, do those generally involve seller notes or just deep-pocketed buyers?
Um, Both, but I would say more often, we're seeing buyers who aren't using SBA take down, the businesses that are much larger than that. So there's, whether that's funded searchers or like small private equity, independent sponsor type folks who are doing the deals kind of north of 10 million.
Cool. Okay, just a few more. Okay, someone says, thanks, I'll email you. Wonderful. How many deals of in your platform have closed in 2025 and in 2024 ballpark-ish?
In 2024, there were 4 deals on our platform. So far in 2025, we've seen 12 deals close on our platform.
Look at that. That's awesome. That is acceleration. EBITDA multiples can be wildly differing. Do you have a formula to help us gauge this when it comes to getting to a number? I'll just say this from our perspective. Typically, there's some industry conventions for the type of business being acquired that can impact. It's almost always in the 3 to 5 range for businesses of this size, and then where in that range tends to often depend on what type of business is being acquired, and with the biggest predictor being the type of revenue. Is this recurring revenue? Is this contractual? You're probably going to be higher up. If this is very project based and one off and not reoccurring, you're probably going to be lower. There's a million other factors. Customer concentration matters a lot in this. Capital expenditure matters a lot. But those are some of the factors. Do you help with the due diligence process? If yes, how deep would you be involved? We do on the deals that we're excited about and want to invest in. We're thrilled to be helpful. And we can chat more about that. We want to see the searcher lead the process because it's a helpful assessment for us of seeing the person in action, but we also want to make sure all the boxes are checked. And so we're thrilled to be helpful as well. Will you be sharing a recording of this meeting? Yes, we will. We will send it out through email. Where can I find a list of brokers? I actually don't have a good resource for that, but I would recommend Google, which I really apologize for. There might be resources on Search Funder, the social network site. I
I've
apologize.
seen searchers share this with each other. So maybe there's a searcher who've wrapped up their search and would love to share with you a list of brokers in the space. It can get pretty narrow. You'd want to find a searcher doing a kind of similar search, whether that's geography or industry. But
Cool.
I've seen
Okay.
people share those.
Okay. Last couple. Someone says they have a background in defense contracting, which puts them in a veterinary field of experience. The question is, how do lenders, sellers generally feel about buyers that have limited experience in the prospective businesses of interest? Our experience has been that's not often a limiting factor. If you can demonstrate, like, I've done an awesome job and seen a lot of success in this specific field, and maybe I have some transferable skills that I want to deploy in this industry that has some similarities. If you think about the types of work being done, even if it's not actually the same industry, we've seen that be totally fine. But I'm sure Alex has perspective as well.
Yeah, I mean, we've heard similar things from SBA lenders. I think there certainly are some spaces that, obviously experiences is a requirement. If you're buying a law firm and aren't a lawyer, things like that. But by and large, I'd say, the ETA model and SBA lenders are used to dealing with, it's kind of built for people who are their first time being a CEO and their first time in the space. And I think it's what makes it so great. Exciting.
Cool. Okay, last one, then we're going to wrap this party up just in the interest of time. Does the SBA allow preferred returns for investors? Yes, but they cannot be mandatory. So the way that our terms and all investor terms work is that there's a preferred return, but it can accumulate. It doesn't have to be paid in cash. It's 100% at the discretion of the searcher if it is, because if you require it, then the SBA tends to treat that as a debt investment, not an equity investment. And the same issue can happen with put options. Basically, put options have to be exercisable only after the SBA loan has repaid. And yes, okay, last one from Joe. Back to PG. You said EC would not sign a PG. Didn't you say the SBA would require an investor? The SBA requires of anyone who owns 20% or more of the business. So we always own 19% or less. Great question. Okay. Thank you, everyone. This has been wonderful. We really appreciate you taking the time and going over. Thanks for the great questions. We had 60 questions asked. I will share the recording, and Alex's contact info and my contact info and all of the slides will be in that recap. And we look forward to doing anything we can to be helpful in the future. Hope everyone has a great rest of the day.
Thanks, everyone. Thanks, Grant.
Talk to you. Thanks, everyone. Bye-bye.